So today's Monday, and we got an update from our local real estate economist in Arizona. I was on a Zoom call this afternoon with them. I just want to give you some market updates and let you know what's currently going on in the market. And we're very rate sensitive right now. There's a lot of things going on that are very, I guess you could say this isn't a forever market. This is a for now market. Stick around to the end of the video and I'll share all the data with you. Hi, my name is Michael Smith. I'm a real estate agent in the greater Phoenix area, Paradise Valley, and Scottsdale. In today's video, I just want to share some of the information I received today on a Zoom call with our local housing economist, talking about the overall general market, talking about employment in Arizona, and a lot of things going on. So I think one of the best ways I can show you this information is share some charting and also take a look at what's currently going on in the market. So let me share my screen. So one of the first things we noticed about the market is this is a 30-year fixed mortgage rate right here. And it's, as you know, it's on a big climb up. It started to reach its low right here. So the one thing that we found is right here, the 30-year fixed went down to 4.99%. And that was a really good time when people locked in that rate, because it's substantially lower than today's rate of 5.89%. So people that were on the ball with their lender and were able to lock in their rate, we saw a big jump in the market. Now, a lot of people think that the fact that the market jumped and we went with a lot more pending listings, that the market's smooth sailing ahead. Now, what we're finding as far as where the market is soft, as it always is, it always goes softest on the furthest out suburbs. So when you're looking at property, this is a 40-mile radius around Phoenix, and any of these outlying areas, Queen Creek, Buckeye, all the outliers for the most part are going to be where you're going to see the biggest depreciation or the biggest price decreases in the market. Another reason why that happens is that's where you have the most amount of new home inventory. So if you're a resale person and you bought a home even 2 years ago and you're trying to sell the home, you're going to be up against new home construction. Now, incentives by new home builders right now are up about probably around 50% over where they were from the peak. In other words, they're giving a lot more incentives. Now, even though they are giving a lot more incentives, we're still down from normal concessions of what we would see in a normal market. So the builders aren't giving the homes away by any means, and what they've actually done is they're not building as many homes. They've really slowed down on the homes they're going to build. I think it said, new home permits were down 50% basically from a year ago. So what they'll do is, they're going to have certain communities that they're building out, and they were trying to get caught up on building all these homes, so they don't necessarily have to pull a lot of permits right now. They can build out for the properties that they already have the permits for. So many of the subdivisions that are already under construction, those permits won't have to be repulled, but they're not necessarily pulling permits for any new acquisitions or any new land or any new developments that they're doing. That's come down quite a bit. So I always like to look, if you really got micro on this thing, you would really have to break it down by each zip code. And when I'm looking at these charts, I'm always looking at primarily single family homes. Now, some of the single family homes that are tear downs and things like that, they're going to show up as a single family home, but they're really probably selling a lot. So basically, let me go in right here and show you what's currently active on the market in, this radius around Phoenix. And that captures most of the major parts of the city. Okay, so let's take a look here. In our MLS right now, with that map that we had drawn and map radius of 40 miles around Phoenix, basically, we have 14,000 current listings, single family homes right now for sale. They range in price from $124,900 to 32 million on the high end in Silverleaf. So now I want to go and compare that to what's pending. And I always like to look at what's pending or under contract because it can show you the relative strength of the market. So if we have 14,000 listings for sale currently, we look at what's currently pending, and we currently have pending, meaning under contract, 5,639 homes. So and you can see where they're at. And the one thing is about the Phoenix and the Valley in general, you know, if you just look at this map, it's going to show you it's pretty well spread out around the valley right now. But, you know, we basically have 5,000 homes. So a third of the homes, let's just say, are pending versus what's currently active on the market. Now we'll watch those trends and see if the amount of homes that are for sale go up and the pendings go down, and then we can see the trend. Okay, but basically that's what I'm going to watch every single month to see if we're trending higher or lower. But then if we go into certain zip codes, I can just tell you, like Scottsdale for an example, Scottsdale is still really strong. We could go in and put in Scottsdale, break it down that way. And there's certain zip codes in Scottsdale that are doing even better than others. So in Scottsdale alone, we have 409 properties that are currently pending versus 1,100 homes on the market active. So you can see Scottsdale's clipping along pretty good, where 50% of the homes are basically around 50% are under contract versus, you know, the whole valley in general. And again, I could go down into certain zip codes around the city, including Scottsdale, where we would find even more homes are pending relative to how many are on the market. So not all markets are the same. If I go into this housing data information right here that Redfin puts out, you know, it says it's somewhat competitive. Homes in Scottsdale receive 3 offers on average and sell in 36 days. So that doesn't really sound like a crash or anything in the Scottsdale market. You can see the pricing here. The pricing is definitely still high. It COVID low right here in May of 2020. We hit the bottom, and then it was just off to the races, especially once those interest rates got so low. So they're calling, you know, on this particular charting, they're calling the Scottsdale housing market a 50% market. Sale to list price is just about 97.8% of asking price. So the market in general is definitely making some moves. It's not a forever market, it's a for now market. And what we tell people right now is, don't get married to the interest rate, marry the house, date the interest rate. I think anybody that's buying right now and they need to relocate, they need to look at the interest rates. If I have a family member right now that's relocating from California to New Jersey, and I told him to have all your ducks in a row, get with a good lender over there, and watch the rates and try to lock in your rate. They want to move around January, and they could rent or buy, but you know, they're basically going to buy. And I just tell people, the way things have changed over the past 10 years, we all look at our stock portfolio and our house value every day, ever since Zillow came out with their Z estimate. In the past, when I was growing up, my parents never looked at what their home value was. It was a place to live. It was a place to raise the family. So we didn't look at it like that. Now everybody seems to look at their home like an investment, and they want to see if they hit the million, you know, became a millionaire overnight with some of their stocks or their real estate. I told my nephew, look, you got to have a long-term perspective, which they do. They're going to get married. They just got married. They're going to have a family. And if they look over the long term, they need to be flexible on the ability to refinance if the rates drop. But one thing that we all know about rates, and you can talk to just about any lender, we can't predict the future, but the thing about rates is that the mortgage rates are probably never, at least not unless we go back into a COVID lockdown, ever going to reach the lows that they reached during COVID. And if they do, it'll be a catastrophe in the economy along the same lines. So, I mean, what's going to probably happen is rates are going to start to level off a little bit. They're going to peak out, then they're going to level off as soon as inflation starts to drop. And then people will have a little extra spending money and people will start going back into housing. One thing you got to keep in mind is when you're going to buy, when is the best time of year to buy a home? Well, it's normally right around the holidays. The reason being is a lot of sellers have a little more flexibility. They'd like to have their home sold before the end of the year, and many of them want to have it sold before we go into the holiday season. They don't want to be dealing with it, otherwise they'll take their home off the market. When you go to buy from January, let's say, into the end of April, in Arizona in general, we have a lot more people in town. This year we have the Super Bowl, meaning there's a lot more competition in town for those homes that are available for sale, and a lot more people. Not everybody is interest rate sensitive the same way. Certain parts of the valley where the homes are less expensive, the buyers are going to be more sensitive to the interest rates. But on the more expensive homes in Paradise Valley and Scottsdale, not as much. They're more concerned about their stock portfolio a lot of times, or their business, how their business is operating and profitable versus the mortgage rates. But when you go into those spring seasons in Arizona, there's just so much more competition from other buyers that you can't always necessarily get the best deal. Where if you go right into the holidays, before the holidays and in the fourth quarter in general, you're always going to probably get the best price. It would be no different than if I went back to Chicago and I was trying to buy a home in the middle of winter when only serious buyers are out looking at houses during the cold weather. Well, it's the same here. People are either not in town yet, they're coming for the winter season, and there's not as many people in town, so you have a lot less competition. Or you wait, until when more sellers are going to put their homes on the market, which is going to be into the spring, but you're going to have more buyers in town at the same time. So anyway, I just wanted to give you some of the updates from the Economist today on what they were telling us. Again, the market's just moving, and interest rates are the thing that's really affecting it a lot. A lot of people are holding out right now, and they're watching the market, waiting for a crash. Believe me, I wish it would crash for people, that they could go and buy a lot of these homes cheaper, but I really don't see it coming. We have 61 international companies talking to the state of Arizona right now about moving in. We're having a battery plant built out in Mesa. We have a lot of industrial manufacturing coming to town, and a lot of stuff in the financial areas where our jobs are up over 200% in the financial sector versus the United States in general. Anyway, I just want to put out this information. Thanks for tuning into the channel. Please like our videos and share them. We're just out here trying to provide information for everybody. It really helps our algorithm with YouTube, and they share our video with more people. The more people we get to like it, comment, and watch our videos. So thanks again. Talk to you soon.